Greetings, colleagues! Today we will talk about quite an important topic, namely about intraday trading and scalping. You're on the Make Money channel. Let's figure it all out. Let's start with intraday trading. Intraday is a difficult kind of trading for a beginner. Quite unpredictable price movements are possible throughout a day. Small stop losses and take profits are also very stressful psychologically. It is not easy to place a large stop loss within a day, as the profit-loss ratio will be ineffective. During the day, the price passes not many points, and entries into the trade are more precise than in long-term trading. That's why stop loss is short. It's hard to hold a trade calmly when the price is constantly dancing close to the stop loss. The most common mistake that beginners make when trading intraday is of a psychological nature. It is to push back the previously set stop losses when the price is approaching. It is strongly not recommended to do so. More information about traders' psychology is available in our separate videos on this topic. Intraday trading requires enough time to track market trends and identify potential entry points into the market. And of course, it requires discipline. If you're limited in time, you'd better give up this way of trading and switch to long-term trades. Advantages: if you compare day trading with scalping, scalping is a much more complicated than intraday trading, as day trading in comparison with medium-term trading. If you're a beginner and don't want to use mid and long-term trading, it would be better to stay with day trading, but definitely not with scalping. Also, the deposit for intraday trading can be small, which is very suitable for a beginner, because they will not get big losses. In addition, successful intraday trades can bring more profit within a short period of time than medium and long-term trading, as a percentage of your deposits. Let's analyze it with an example. When a trader holds a trade for a week or month, it is sure to hit a correction while it is moving towards its target, as the price is not moving linearly. Thus, the price will pass, let's say 400 points in a month, which will bring profit to the trader. At the same time, the price can easily pass 100 points during a day. It turns out that the total profit from numerous intraday trades can be even larger than the one long-term trade. But this is on condition that you will make profits every day, and it is almost unrealistic because there will also be losing days. It is the ratio of losing days to profitable days in your trade that will determine what is better for you, day trading or medium and long-term trading. After all, in the end, the total profit determines everything. Beginners who are just starting out in intraday trading are advised to use charts with periods of at least 4 hours. There is less market noise than in shorter trading periods like 1 hour and below. With 4 hours, it will be easier for you to hone your skills. Let's take an example of an intraday trading strategy. In order to make it work, we need a pair with a stable trend on the daily chart. In the picture, this trend is marked with a blue rectangle. You can see that the price is falling steadily. Each daily candle brings the price lower and lower. In the area which is marked by a small white rectangle, the trend is already quite obvious. It means you can start selling intraday in this place. As a reminder, we need a steady and good trend to work with this strategy. Important: you shouldn't take more than one profit on one trend. If you have found a good trend on a pair, work throughout it for a day, and that's it. Then watch other pairs and look for trade opportunities. Trading within the day, you should set the risk limits for the entire trading day according to your trading system. Trading should be stopped after reaching the total loss for the day, which the trader defined for himself based on the size of the deposit and the laid-down risks. The excitement and desire to win back losses does not usually lead to anything good. It is necessary to pay attention to important macroeconomic statistics, because during its publication, sharp price fluctuations and spread widening are possible. The most important thing to remember is that even the most profitable online trading strategy might not bring you any profit. The best thing to do is to create your own one based on your own experience, by trial and error, of course, on a demo account. It is not recommended for beginners to start their trading career with day trading. First, it is better to gain experience in other trading types with longer trades. Even experienced traders, realizing the difficulty of intraday trading, often give it up. Let's move on to scalping. Scalping is a type of trading that allows you to profit from currency fluctuations in the market over a short period of time. The duration of a transaction may sometimes last up to several seconds. Trading on the basis of hourly or minute price fluctuations provides even more profits. For example, If a trading pair passes about 70 pips during the day, the gap between its high and low is quite significant. That is why scalping is so popular at the moment. Advantages of scalping. Very often, you can see a beginner who has recently entered the market depositing a few $100s on his/her balance. It is barely enough for long-term trading operations. That's why traders often decide to use scalping as their main trading strategy. The opportunity to gain the income at once within several seconds or minutes is another great advantage of scalping, alluring for newbies. In addition, if a trader has enough money on the deposit, he/she can open several orders, which will enable him/her not to miss a good deal. As a rule, such trades are opened only for a few minutes. Disadvantages of scalping. Short-term trading can bring instant profits, in most cases very good ones. However, one should consider high risks. During the trading session, a trader can both earn and lose by opening many trades. The number of trades executed by scalpers is up to 200 a day. However, it is unreasonable to expect that all trades will prove to be profitable. It is important to understand that one scalping deal will not bring you great profits. The result should be the pursuit of a positive P&L by the end of the trading day. What you need to know to do scalping. All that is often needed is the ability to determine the direction of the market, support and resistance levels, one or two indicators. The fundamental analysis may not be studied. Trading using scalping systems implies studying of small time intervals, where it is almost impossible to track the influence of fundamental data. Good attention and quick reaction are needed from the trader. If you have hesitated after the signal for a trade, you better skip it, rather than open a position at a price that is not profitable for you, as it has already changed. When opening a trade, scalpers usually set a stop-loss close to the opening price. This allows you to minimize your losses in case the price moves in the opposite direction. Once again, this strategy doesn't guarantee success. If the trader has opened a trade with the maximum volume possible, or very close to the maximum, without setting any limits on losses, he/she may get a margin call, which will result in the loss of all available funds in the account. Before studying this type of trading, one should remember that scalping is a psychologically challenging trade. The deposit goes up and down during one trading day. Not every trader can trade under such conditions. My friends, that's all we have. Thanks for watching. Don't forget that we also have our Telegram channel, which is in the description below the video. Also, don't forget to subscribe to the channel and of course like this video. Make money.